this idea that the Chinese economy is maybe starting to stabilize. We've seen a lot of measures, fiscally and monetarily, from the government. So is this a sign that things are actually working for China?
Yeah, things have stabilized without a doubt. FX reserves were better, PMI data was better, trade data was better, and as Seema mentioned, today's GDP number was better. China has stabilized. I think it's probably a little bit sooner than we anticipated. And in fact, if you look at some of the EM Economic Surprise Index, it's been a little bit better than people had anticipated, certainly at the end of last year. And a lot of the stimulus activity that China enacted last year is working. We're seeing China stabilization right now.
So Patrick, as we talk about the move that Chinese markets have made ever since the bottoming out process that happened in retrospect in the fourth quarter, what exactly does it mean? Does the economy there support the numbers? Do they support the move that the market has anticipated, given what we've seen out of China?
Well, I think a lot of the sentiment points to higher markets. I think what I take most comfort in is the fact that it's being driven by the consumer. If it was coming from industrial activity, I would have less confidence that is a sustainable trend. The fact that we're seeing actual consumers getting out there, willing to open their wallets, willing to spend money, and that is driving the success, that means the growth that we are seeing is on a more solid footing. I think that's important, as opposed to industrial success, which is where it traditionally come from.
Some skeptics would say that, you know, 1 month, the data from 1 month certainly does not make a trend, especially if you look at the narrative out of China in 2018 and even the data from January and February. So based on what we've learned overnight on the topic of GDP and even over the past month on PMI and exports, is it time to bet on China, or would you still wait on the sidelines?
Well, our assumption, and to use Pat's point, stabilization, I think, is the key word, and that's ultimately what we're looking for. We're not looking for a massive reacceleration. Our hope is stabilization. So to the extent that we hit that more stable level, when we look at internal measures of activity, whether it's transportation of goods around the country through freight shipping or electricity usage, internal measures also point to a similar stabilizing factor. So stabilization is our base case. If we do better than that, that's just extra.
So we can talk about trajectory. We know that the Chinese government wants to manage the economy to be a little bit more consumption-driven, kind of like we are in the United States, as opposed to more export-driven as well. It is the rate of change at which is catching some people a little off guard, Pat. And is that cause for concern, this idea that we may be moving quicker towards a consumption-driven economy in China than some had anticipated?
No, I think anytime you have a major economy like China shift from one of manufacturing to one of consumption, there's going to be some issues in data. And some of that data shift will just take time for markets to adjust to. But no, I think it's a good thing. I think a strong Chinese consumer is good for the global economy, and we need that for a bullish case on equities going forward.
All right, so just stick around here, because we also had Goldman Sachs CEO David Solomon sit down for an exclusive interview with CNBC. He expects the economic expansion overall to continue.
I do think growth slowed around the world, and I do think the trajectory of growth slowed in the United States as we finished out 2018. But it's pretty clear to me that while the first quarter was sluggish, the second quarter is chugging along pretty well, and certainly we're at trend. And I think central banks around the world, including in the U.S., have become much more accommodative, here in the new year. Yeah. And so I think that bodes well for, continuing the expansion.
All right, so there it is, the Thanksgiving turkey in the month of April. We're going to put it right there. Let's talk about this, because the global economic picture seems more robust to many folks like David Solomon at Goldman Sachs. Pat, we'll start with you, maybe a little bit, this idea that, is he right? Should we be at least optimistic about the idea that China and the U.S. and the rest of the world are going to work constructively to add to the economy?
I think near term, that certainly feels like it's in the cards. The U.S.-China trade negotiations that we expect to have resolution on probably within the next month or so certainly feels as though economies or the countries are beginning to work together in a more constructive way.
Now, Patrick, what do you think?
What's interesting is you mentioned the rate of change earlier, and I think right now economies are slowing. If we look at U.S. GDP, we're going from 2.4 this year to 1.9 in 2020. And that's really where the pace is going. The question then becomes are we going to come in better than that? Potentially we can, but what's important is it's not recessionary. So It's great backdrop for risk assets, and that's ultimately what has brought volatility down and is driving the market higher.
Great environment, Seema, for risk assets. I mean, you cover all of these different markets. Where do you see that strength really kind of percolating?
Well, it's interesting. I think these global central banks working in unison, that certainly provided a fuel to the fire, if you will, when looking at emerging market assets and a lot of stocks overseas on the international side. But I guess I wonder, how long will this continue? And if this stabilizing China story continues, how long will it take to spread to other parts of Asia, Japan, Philippines, and Thailand, that those countries are so reliant on China for trade? You wonder when it starts impacting their economies.
Pat, from an economic standpoint, is there one developed or emerging market economy around the world that you think stands out as the real wild card in 2019?
Oh, it has to be China. Absolutely. Seema mentioned earlier the stimulus that the Chinese government enacted last year. We're beginning to see it show up in data today. But China is absolutely the wild card. As China goes, so will the rest of Asia go.
All right, is there a pocket of strength out there that we should be keeping an eye on besides maybe the China story?
Well, I think the U.S., people continue to discount the success that we're seeing in the U.S. I think the equity markets reflect how successful it's been. And I think the fact that the central bank has become less hawkish, and that has really brought down volatility, that is really what's driving market success here. And I think people continue to say that that's not true, but we are living it right now.